Welcome to Financial Freedom and Finance Channel. Here we upload videos to give you a helping hand in reaching your financial goals. We hope to give you tips for achieving financial freedom using finance, one video at a time. If you are new here, do not forget to subscribe to our channel for more videos about financial literacy. In the lesson today, you will learn how to purchase 7 income-generating assets that everyone should own. Here is a list of the 7 finest income-generating assets you may invest in to generate passive income. CDs are certificates of deposit. Bonds. Real estate investment trusts, REITs. Dividend-yielding stocks. Real estate rentals. Peer-to-peer lending. Developing one's own product. Earnable provides you with specific techniques, frameworks, hands-on tactics, real-world examples, mindsets, done-for-you templates, word-for-word scripts, and hard-won breakthroughs when you're ready to launch and develop your own business. Acquire secure income-generating assets. These are conservative, low-risk assets that provide income. In exchange for its low volatility, however, you will not make as much as with more aggressive investments. To guarantee sufficient diversity, it's still advisable to have a few of these in your portfolio. Asset number 1. Deposit certificates, CDs. Banks provide certificates of deposit, or CDs, as low-risk financial investments. The operation is straightforward. You lend the bank money for a certain period of time, known as the term length, and earn interest on the principal throughout this time. The average duration of a term ranges from 3 months to 5 years. During this period, you will be unable to withdraw funds without incurring a fee. But it is almost certain that your money will increase at a predetermined pace. The interest rate changes depending on the duration of the investment. However, the longer you loan money to the bank, the greater your earnings will be. And because the FDIC insures certificates of deposit up to $250,000, they are extremely low risk. However, there are several drawbacks. Inflation. The average inflation rate in the United States for the past 60 years has been 3.7%, which is above the average CD interest rate. Due to inflation, it is possible to lose money if you store your money in CDs. Low levels of aggression. If you are young, you may afford to be somewhat more risky with your assets, because you have more time to recover from any losses. Your growth potential is far greater. This provides you with greater flexibility to invest in riskier products and perhaps make more money. Duration of investment. You may not be able to part with your cash for quite some time, especially if you have imminently approaching financial obligations, buying a home, vacation, weddings, etc. If you're looking for a low-risk, worry-free investment, purchasing this asset is a wise decision. You may also want to know whether a CD or a Roth IRA is better for you. Asset number 2, bonds. Similar to CDs, bonds as an asset are similar to IOUs. Instead of donating the money to a bank, you lend it to the government or a company. And they function similarly to CDs, meaning they are exceptionally stable. When you invest in a bond, you will know just how much you'll receive back. Assurance of a comeback. You may even specify the quantity of a bond you want to purchase, 1 year, 2 years, 5 years, etc. Smaller returns, particularly when compared to riskier assets such as equities. Bonds are an excellent investment if you want to know exactly how much you will receive back. Read our post on understanding stocks and bonds for additional information. Asset number 3. Real estate investment trusts, the third asset, REITs. In 1960, the U.S. Congress created real estate investment trusts, or REITs, so that individuals may engage in income-producing real estate. REITs are similar to real estate mutual funds. A group of properties managed by a firm, sometimes known as a trust, that utilizes investor funds to purchase and develop real estate. If you like to invest in real estate but do not wish to own or finance property, they are an excellent option. Similar to the majority of blue-chip companies, more on them later, REITs provide dividends. Additionally, REITs concentrate on several industries, both local and foreign. You may invest in REITs that construct residential complexes, commercial structures, and even healthcare facilities. Note, REITs are subject to certain tax issues. Overall, they are a simple method to invest in real estate without incurring the initial expense of purchasing property. To begin, visit your online broker and buy a REIT like you would any other investment. One I suggest? The Vanguard REIT Exchange Traded Fund, VNQ. This ETF fund from Vanguard monitors a REIT index from MSCI Inc., a prominent investing research firm. It's okay if you don't know how to do it. Read our page on mutual funds to learn how to create an account. Purchase risky income-generating investments. The following investments are riskier and may need more active management on your side. The profit potential of these ventures is substantial. If you invest time and effort into these assets, you may be rewarded with a substantial quantity of money. Asset number 4, dividend-yielding stocks. Some corporations distribute quarterly dividends to their shareholders from their profits. These are referred to as blue-chip equities and are often dependable and resilient to most economic downturns. To assure constant returns throughout the year, many investors prefer to diversify their portfolios with dividend-paying assets, such as blue-chip equities. And while some investors like to choose individual stocks by hand, you may get started by investing in dividend-focused index funds. Asset number 5, rental properties. Leasing property appears to be simple. Purchase a home or apartment complex. The rooms should be rented to renters for a minimal charge. Monthly rental payments pour in like gangbusters while you sip pina coladas and generate passive money. Hell, it does sound incredible, but it is a gross oversimplification. In reality, renting out property is far from relaxing. As the owner, you are liable for all aspects of the building you are renting out. This includes repairs, upkeep, and pursuing delinquent tenants for rent payment. And may the gods protect you if they skip a rent payment. If this occurs, you will need to find another method to pay your monthly mortgage payment. You can generate money with property rental, many people do. It's only that doing so can have a significant negative impact on your money. See our page on home poverty for an illustration of this. If you are interested in acquiring rental properties, please go to our page on purchasing a home for additional information. With the emergence of websites like Airbnb, it is no longer necessary to purchase a separate residential unit in order to rent out a spare room. Signing up for the site and taking advantage of short-term rentals is straightforward. You'll still have to deal with certain property management difficulties, but you'll be able to utilize the property you currently own, e.g., spare bedroom in your house. Asset number 6, peer-to-peer lending. Peer-to-peer, P2P, lending, sometimes known as crowdlending, enables investors to function virtually as a bank. You lend money to others using a peer-to-peer lending network, such as Lending Club, and they repay you with interest. 7th asset, developing your own product, how to build an asset. This is one of my preferred methods of making money. It is also a means of constructing an asset rather of purchasing one. Not only is it inexpensive, but it's also readily expandable, meaning your income potential is unlimited. And neither engineering nor construction abilities are required to develop your own product. In reality, you likely utilize items daily that you can also create. E-books, online courses, podcasts, webinars, whatever. These digital information goods are ideal for earning money without incurring expenses. But they need an investment of your time and energy. In addition to creating the product, you must also ensure that it will be profitable. Therefore, we have focused our sibling site, GrowthLab, to assisting entrepreneurs in creating, expanding, and scaling their enterprises. Unlike a bank, however, the loan applicant is not subject to financial background checks or exorbitantly high interest rates owing to factors such as poor credit history. P2P lending is not risk-free, though. In fact, depending on a borrower with poor credit to repay a loan might be one of your riskiest financial bets. But if you are ready to dedicate more time and money to learning about the platform, it might be a highly profitable investment. That is it for today's video. I hope you were able to learn a thing or two about what income-producing assets to buy, handling your finances, and where you should get started if you want to achieve financial freedom. We will see you in the next video. Thank you for watching.